My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here are your daily technicals for Wednesday, the 24th of February 2021. The first chart we're going to look at is Euro-Dollar. An indecisive doji cross yesterday as the market has seemingly gotten itself caught up in the previously highlighted congestion combination made up of the flatlining short medium moving average currently at 121.53 and the key March 2018 low at 121.52. Superficially, that might be what is going on here. However, I suspect the neckline of the possible reverse head and shoulders formation, currently at 121.64, constructed over this year so far, may have a significant impact as well. Beyond this, on the upside, we have the next overhead resistance at the April 2018 low at 122.12. Overall, there's a lot going on here. The descending wedge pattern is still live and has now a potential upside target X in the 123.48 area. Plus, we might also have a preliminary target X2 in the 122.95 area for the prospective reverse head and shoulders pattern, though this is by no means certain as yet. So far today, nothing much, as the topside is once again being baffled by the prospective neckline of the reverse head and shoulders pattern. The next chart to look at is sterling, cable. Sterling against the US dollar. A fourth bullish white soldier yesterday and a continued follow-on higher from the recent bullish engulfing pattern. We have now a new high not seen since April 2018. Ultimately, this has been a follow-on higher from the break upwards last week over the dynamic capping resistance, now support, of the middle time currently at 138.85 of the important late June, late September 2020 bullish shift pitchfork. Now this pitchfork that has shown the bullish angle of attack since November last year. Meanwhile, overhead, we have limited strands of resistance, with perhaps the March 2018 high at 142.43 the most significant nearby. So far today, another new recent high and an attempt at testing the March 2018 high at 142.43. So far rejected, but not aggressively. Euro sterling. A fresh bearish black crow yesterday. Another new low not seen since March 2020 and a resumption of the move down from the break lower at the start of the year from the recent sideways triangle and head and shoulders top. We still have the downside full of potential for the recent sideways triangle. That's at target X1 in the 84.80 area and the potential target X2 for the head and shoulders top still in the 85.15 area. So far today, a big dip lower with prices now not seen since February 2020. The market is approaching the first target X2, though suddenly now cautiously as we are so near. US dollar against the Indian rupee. A second bearish black crow yesterday with a new low close since March 2020, though not an outright new low. I suppose you could say it was the fifth in a row if you were being pedantic, though some of those were indecisive spinning tops. There was also a continued close below the overhead resistance of the significant 50% Fibonacci line, the July 2019 to April 2020 move at 72.64. Topside, we still have the capping effect of the descending short moving average, currently at 72.72, and its partner, the November 2020 to date downtrend, currently at 72.84. Meanwhile, it was also the first close below the September 2019 high at 72.41. Further down, we have the November 2019 high at 72.24, the January 2020 high at 72.13, and the February 2020 high at 72.05. So far today, another move lower with a fresh low, though not really testing the November 2019 high as yet. US dollar against the Brazilian real. A second bearish black crow yesterday, I suppose a follow-on to the previous session's strange reaction to the earlier key reversal down. Topside still has resistance at the combination of the January 2021 high at 551.59. the mid-November 2020 high at 552.57 and the lesser Fibonacci level at 552.91. Below we still have the same questionable congestion of supports consisting of the recent 50% Fibonacci line at 540.85, the 50% Fibonacci line of the May to June 2020 move at 539.29, plus medium moving average currently at 537.71 and the long moving average currently at 536.33. I've recently spoken about how I had been a little perplexed by this market's recent action. I thought maybe it might have a scallop pattern or a bump and run reversal pattern in the offing. It was all a bit unclear to me. However, today I think I may have spotted something, a new pattern. We may, just may, have a possible ascending triangle in formation, formed from the mid-January to date uptrend, currently at 537.64, and the previously lesser Fibonacci level, 552.91, which I'd already mentioned. It is too early to start naming potential targets topside or below, but keep an eye on this idea. US dollar against the Mexican peso. Bearish dark cloud cover pattern and possible bearish double here yesterday. The market's recent rise has been tempered by the approach to the overhead lows of September and October 2020 in the 2083 area, balking at testing them. Additionally, just keep in mind we now have the rapidly descending long moving average currently at 21.1898 entering the frame. So far today, a limited follow-on lower today to yesterday's action. First support below will be the medium moving average currently at 20.2745. ICE Brent crude oil futures. After a quite impressive bullish engulfing pattern on Monday, yesterday turned out to be a partial follow-on through, but with strings attached. Yes, it was a follow-through higher that made a new high and a high close not seen since January 2020. However, though the market breached the April 2019 to date downtrend, currently at 65.63, a second time, prices did not, though, manage to close over it once again. Indeed, the session finished with an indecisive spinning top, right on the high of the recent market. Not what you would wish to see if you were a bull out there. Please remember, this downtrend had managed to cap the market last week, which is why the current tries higher are interesting. Beyond this downtrend, we seem to have fairly free territory until we start looking at the 2020 high at 21.75. So far today, a lower opening, but a test back up over through the downtrend once again. It's all very interesting now. Just over the downtrend, we have some congestion in the 65.95 area. ICE gas oil futures. After an impressive combined bullish engulfing pattern and bullish opening white Mariposa on Monday, yesterday seems to have been a partial follow-through of sorts. It was another new recent high, the highest since January 2020, a fresh new high close and a second consecutive close up over the interesting February 2020 high at 523.75. However, right at this high, the market also made an indecisive spinning top. Not what you want to see if you were a bull out there. This is interesting because the next seemingly significant overhead resistance of note is at the 50% Fibonacci line of the venerable June 2014 to April 2020 move of 562.75. This 50% Fibonacci line is also the gateway to some congestion resistance between 562.75 and 596.5. That dates from September to December 2019. So far today, a lower open followed by a dip, and then a mild recovery of sorts to just over yesterday's close right now. This is very interesting considering we are in a fairly free territory ahead of the 50% Fibonacci line at 562.75. UK FTSE futures. A lower but interesting bullish white soldier yesterday. Yet again, the market found it hard going, pushing lower through supports, notably the short stroke medium moving average, currently at 65.72, especially on a closing basis, as well as the June 2020 high at 65.12. Further below with some support from the very recent small band of congestion between 64.40 and 64.85. Then another recent small band of congestion between 63.80 and 63.11, and the larger and older congestion dating from March to June 2016 between 63.75 and 60.75. Finally, and contrary to this recent seemingly hidden bullish tendency, there's a hint, just a hint, that we may have a head and shoulders type action building up from November 2020 to date. No more on that right now. So far today, a slightly lower open, below the short medium moving average, but above the June 2020 high, with a large portion of the action being between those two levels. German DAX futures. Another obtuse day yesterday. Still no follow-on to the recent key reversal up. Instead, there are many ways to look at this one. It could be a straightforward bearish black crow for long tongue and tail, and a close below the neckline, currently 13,868, of the important rising, ragged late September 2020 to date reverse head and shoulders pattern. In the process, also breaching on the downside the rising support of the short stroke medium moving average, currently at 13,759. However, one could also look at yesterday's action as a possible long-legged indecisive spinning top that still managed to close over the important February 2020 high at 13,821. All this is very complex. On the wide top side, we still have the cap formed 2 weeks ago at 14,185, whilst below we have the rising medium moving average, currently at 13,334. That has yet to enter the frame. Please remember one final thing I mentioned yesterday. One could almost imagine the last 3 weeks might be forming a double top pattern with the neckline at the February 2020 high. So far today, a reactionary move back up with a slightly higher open and a move up to test the overhead short moving average, currently at 13,956. US E-mini S&P futures. An interesting day's action yesterday. Whilst one can easily see that it was a demi follow-on to the previous session's bearish black crow, that was not all. The market did indeed drop down through the support formed from the combination of the January high at 38.62 and the middle time, currently 38.77, of the bullish late December 2020 to early February 2021 bullish Andrews pitchfork. One should also note that the fall was stopped dead by the rising short stroke medium moving average, currently at 38.08. And indeed, this moving average prompted a very sharp rise back up through the previously mentioned support to finish the day as an indecisive doji cross, albeit with a long or very long tail. So far today, a slightly lower open and dip once again below the previously mentioned supports, only to rise back up and seemingly move up to test the overhead rising short moving average, currently at 38.92. French CAC 40 futures. A second consecutive, if higher, indecisive pattern yesterday. This time it was an interesting doji cross that also managed to make a new recent high, if only just. Additionally, the action countered the previous rare 2-day bearish descending hawk pattern. There's been a lot going on here in a very small space. One consistent feature has been the previously highlighted overhead upper bull channel line. That's currently at 57.93 of the big May 2020 to date broken bull channel. This has been capping the rise since last November. Overall, we're still in between the overhead middle time, currently at 58.93, and the lower time below, currently 56.11, of the December 2020 to January 2021 bullish Andrews pitchfork. So far today, lower open, but an immediate vault face back up over yesterday's close and testing the upper bull channel line again. Right now, we may be constructing a bullish engulfing pattern for today. Not that hard a deal really, given yesterday's indecisive doji cross action. LME 3-month copper. Yet another bullish white soldier yesterday, the 13th in a row, though some of those were only just, as they resembled indecisive spinning tops more than anything else. It was ultimately a continuation higher from the recent rare bullish roof pattern, sometimes called a half diamond pattern. We've not seen such highs since August 2011. Looking back there, we're in fairly free territory here, bar some congestions, until the $10,000 level, So it pays to watch those congestions at 91.60, 93.05 and 96.05, which is why yesterday's high was stopped dead like a car hitting a concrete barrier in a 93.05 congestion. So far today, a further attempt higher over the 93.05 congestion before seemingly succumbing to it and moving back down towards the earlier 91.60 congestion. Then through that, before moving back up again to stay in between the two congestions. Today, right now, it looks like a bearish dark cloud cover pattern, but there's plenty of the day ahead still. LME 3-month aluminium. An interesting day yesterday. A bearish barometer was also an outside day. Prices also pushed up just over the August 2018 high at 21.78, but failed to maintain it. On the day's move on the downside, prices halted just before the important big old 50% Fibonacci line of the 2011-2015 action at 21.19. The day's action effectively showed the nearby bracket within which the market was working. So far today, a small move lower right now, yet still within the confines of the aforementioned bracket. Possibly bearish dark cloud cover pattern, but it's too early as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. And here is the final bit.